What's going on, everybody? It's Jeff here. Welcome back to the channel. In this video, I want to go over the news that was released on Friday, why it was an initial shock to the market, and investors kind of then after took a step back and got to see the bigger picture, what it means for us going forward as retail investors in the short term and the long term, and just to give you guys a really good idea on how you can start to shift your money and move which way the market is moving. That is how you are going to beat the market year over year. Guys, so stick around. You're not going to miss this. For those of you that are new to the channel, all I ask is hit that like button and subscribe and join the family. If you're interested in joining our private community, first link in the description. We have hundreds of members. We talk stocks and strategies all day long, including what we are going to be going over in this video. So if you're interested, guys, come check it out. We'd love to have you. Let's get rolling. First thing, this is what we are going to be talking about. It is going to be the jobs report that was posted out on Friday. Now it says, I have highlighted, U.S. economy added a mere 266,000 jobs last month. Forecasters had floated gains close to 1 million, making it the biggest mix relative to expectations in decades. Now, if you look, you could even see the bond market. We'll go over here, that one day insane, let it reload, that one insane drop off in the minute. And then it was like, wait a minute. We're going to talk about what this means for the bigger picture. So immediately it was a shock to the market. And then as you can also see up here, guys, the market ended green. And then it was like, wait a minute, this is where it actually means for at least the next 6 to 12 months. Okay, so I'm going to tell you guys exactly where it's going to be going in that short term and then what it means for the long term as well, guys. Okay, so first off, one thing I do want to point out is this graph right here. As you can see, this is the unemployment rate. It immediately spiked up really high once COVID hit, and then there was a good descending pattern. And if you look right here, guys, it's really started to level out. This is another graph showing this is the 1 month change by employment. If you look at the biggest gainer, it was the leisure and hospitality. Okay, we talk about the restaurant industry as a whole, especially. And a lot of the restrictions were lifted. Naturally, restaurant workers, which make up a very good portion, it's a huge community. There's restaurants, millions of restaurants. Obviously, guys, they had come back, and that's where you see a huge gain from happening. But here is where the issue lies. Couple things. One, transportation and warehousing is down, manufacturing's down, retail trade is down, and look at this, professional and business services. And where I think some of these analysts are actually starting to shift their mindset to is that some of these jobs are not coming back as businesses have had to adapt to change. They had no choice. It wasn't a 1 month change, a 2 month change. This has been a 14, 15-month change since COVID started. Okay. And businesses have fully adapted and said, you know what? Why revert now? Because we've made it work. So that's some of the fear that they have, the fact that some of these jobs are literally disappearing. But here is the total other side of the spectrum. This was an article that I read that states, all right, states canceling unemployment. It's the status in the $300 weekly payments. Okay, I believe it was just 2 states, yeah, Montana and South Carolina, but it goes into talking about the individuals on unemployment receiving an extra $300 per week. Now, I'm going to give you guys my breakdown on this, and this is exactly what I see being in Connecticut. You have restaurants, okay? In Connecticut alone, over 1,000 restaurants have closed down, which means their doors are not opening back. You would think there would be a lineup outside of the door of all these restaurants, but no, they can't even staff what they have. There are restaurants that normally would be open 7 days a week or only 6 days a week. And now they're only open 5 days a week because they cannot staff. I literally went to and I thought, oh, maybe people are leaving the restaurant industry. I literally went to my local Stop and Shop just the other day, and it was last weekend, and they had a job fair, an entire job fair for every department. I'm sorry, an entire department job fair, hiring everything, front end, cashiers, deli, meat, see everything. And it goes into me thinking, it's like people aren't coming back to work. All right. And that's why if you see, guys, where I told you this, it's starting to level out. That curve is starting to level out because you're getting the extra 300 unemployment in some of these positions. They're like, wait a minute, it's not beneficial for me to go back to work. Now, I don't blame some of those people in that situation. Everybody has their own opinions, but what does that mean for us as investors? Well, that is why initially when we saw this happen, there was a big pullback in the market, and then investors got to think, wait a minute, if people aren't going to be going back to work yet, okay, the jobs report is a miss. That means that easy money is going to continue. Okay. The interest rates are going to stay low until they can start to get people back to work, get that unemployment down, and break away from the $300 added weekly payments. Okay. So that's where investors are bullish on it. You are slowly starting to see high growth and tech sectors start to get more funds back into it after the big sell-off that began in February. You're starting to see that. You're going to see that continue throughout the rest of the year. If you look, guys, I'm going to bring this up. All right, this is the cryptocurrency, okay, total market capitalization. And I understand that crypto was really nothing in all the way up until 2017 until it originally got its spike. But look at this curve right here. Insane. Absolutely insane. Even if you look back at the 1 year, it's a nice steady climb on the 1 year, but it's still a huge gain over. So what does that mean for us? Well, right now, like I said, guys, the easy money is going to continue for the time being. You're going to have to pay attention to where you invest your money. If you look at SPACs, there was insane boom and then it slowly sold off. Okay. But it is going to continue. You can expect the high growth, the retail, your consumables to continue to grow going forward. But guys, pay attention for when this news, if you're new to the market, guys, pay attention for when this slowly starts to change. Because when it slowly starts to change is when investors are going to be pulling their money out of the market and looking for more stable ways. They're going to be capturing those profits, locking in those profits, and be able to shift them into other areas that are a little bit safer as the market starts to correct. But that's why immediately you saw a little bit of a pullback and then the market responded really strong. And you're continuing to see that growth, which is good news for us going forward. And like I said, I know a lot of you guys who especially been watching my channel are invested into the tech sector. Okay. Always diversify your portfolio. I hope in February it was a good lesson when you watched just the NASDAQ go down 10% and the S&P was still making all-time highs and your portfolio was down 40%. I hope it was a good realization for you guys to see that that's why diversification is very important. You know, I gave you guys a plenty of plays. Okay, even just to name it, you know, look at Carnival Cruise Line. It was a home run for you guys to easily get a beaten down stock that is still undervalued as we're talking about it, because obviously the restrictions that are still upon Carnival Cruise Line, just one of many that was beaten down. Investors shifted their money over and you're slowly going to see that money come back in the tech sector. Okay. However, the chip shortage is going to still play an effect on this. But out of all this video, guys, yes, I want to tell you that eventually, or we are starting to see a little bit of rotation back in the tech sector. But most importantly, pay attention to where the Fed is. I've said it before, guys. There's a saying, an old school saying, it's don't fight the Fed. And that is investors are bullish, continuing to be, because the interest rates have to stay low until that unemployment can curve a little bit lower, which is good. That's easy money. It's a lot of money fueling the market. Once that starts to change, that's when you can watch that parabolic curve that we have been on really start to come back a little bit. So pay attention. Make sure you have your stop losses tight. Continue investing. I continue to see 2021 to be a bullish year, and I will continue to update you guys as I watch this change throughout the rest of the year. Guys, that's it for this video. I hope you liked it. Give me a thumbs up, and I'll see you in the next one.